All right, ladies and gentlemen, just to get a feeling of what or who I'm talking to, how many of you have been subject to inspections anytime in the last 4 years? Okay, so most of you still have inspections to come. Let me start by saying that inspections is something that's been ingrained in the Act since the Act was written. It's not something that's new. It's just that the last 4 years has really been where the Estate Agents Affairs Board has implemented and has enforced the concept of inspections, where the numbers of agencies that have been inspected in recent years have ramped up significantly. To give you an idea, before 2010, 2011, somewhere around there, the Estate Agents Affairs Board was averaging a total of 20 inspections in a year nationally. In recent years, those numbers has gone up to in the region of 2,500 per annum. And hence, those of you who had your hands up have been inspected. An inspection can really be whatever you make it. And that's what we're going to talk about today. But I'm going to take you through stuff that you know better than I know. You know the Estate Agents Affairs Act better than I know that Act. You know your industry better than I know your industry. You know who the unscrupulous people are in your industry better than I know them. But they're there and they exist, right? Right, so we'll show you, or I'll tell you how you've got a role to play, I've got a role to play, but most importantly, the board's got a role to play in terms of us rooting out these unscrupulous elements within our industry. But to do all of that, we need to understand certain things, and that's what we're going to go through today. We need to understand what is the mandate of the agency, of the board, and where that mandate comes from. We speak a little bit about the acts and the legislation that you need to know of. And like I said, ladies and gentlemen, you know the Estate Agencies Affairs Act better than I know it. You probably know FICA better than I know it. And you know your code of conduct better than I know it. Then we'll talk about compliance inspections, and I'll give you a background, and we'll put the inspections into perspective. Now, how many of you sitting in this room have an innate fear of the receiver of revenue phoning you for something? It doesn't matter whether you're on the right side or the wrong side. Just, it's human nature that when SARS phones you, right, your muscles tend to go into spasm. Correct or incorrect? Right? These things happen. Now, can you put yourself in a position when you get the call, for those of you that haven't been through inspections, when you get the call and I say to you, I am Bashir Adam from the Estate Agents Affairs Board, and we're about to inspect your agency. Can you imagine what happens to your muscles? Right? They tense up, you get all excited, you start hitting the desk to see what papers you've got in there, you make sure everything's, that's not what it should be about, but that's what it is. Right? So we can try and dispel some of those things. We'll talk about some of the focus areas on inspections. We'll make it easy for you. We'll make it easy for you to the extent that when I do phone you and say I'd like to set up an appointment, that you actually say to me, sure, Bashir, when you're coming, and what coffee do you drink, Jacobs or Nescafe? Right? That's what we want to get you guys to at the end of the day. Right? But I'm also going to tell you about some real life stories. I'm going to tell you about the lady estate agent in Pretoria, and one of my colleagues is sitting over there, who actually did one of the inspections, and we discovered that this lady had a tendency to utilize her trust funds through a debit card at Monte Casino. Fact. So I'm not making up stories, it's a fact. Right, so I'm going to tell you about these things. I'm going to tell you about a lady who's a single lady and a school teacher that discovered that she owned 4 properties, of which 2 were sold. She never signed for any of them. She was never there. All right? So when SARS did make the phone call and say capital gains tax, this woman said, what are you talking about? So those are the kind of things that comes up. Those are the kind of things that you're going to be faced with, and this is the stuff that we need to look at. So the Estate Agents Affairs Board was established as the regulatory body for the estate agency industry through the Act in 1976. So since 1976, you guys and your predecessors and all the big agencies in this country have been regulated and did have an act that they needed to work with. However, the fledgling estate agents board took a long time to start enforcing the provisions of the act on the industry. And where they are today is light years from where they were in the early 80s and in the 90s. I think there's still work to be done, but I think they're getting there. The board is classified as what we call a Schedule 3A public entity in terms of the Public Finance Management Act. What's important about that is that the board is accountable. So, theoretically speaking, we're not talking about an agency or a board or a government department that is an entity up unto itself. It needs to be regulated. It is accountable. It accounts to its mother body. In this particular case, it's the Department of Human Settlements. Do you guys remember, what was it, 3 years ago that the board was under administration? You guys recall the administration? Anyone from here had any dealings with the administrator? Incidentally, he was a gentleman from Cape Town. His name was Tezul Pampier. Right, so those of you that do deal with the lawyers may have come across him. But that was the time when the board moved away from reporting to the Department of Trade and Industry, and it was deemed that trade and industry wasn't the place where this board should be reporting to. It should be reporting to the Department of Human Settlements. All right, the overall mandate of the board is the regulation and control within the industry. So ladies and gentlemen, I've got news for you, and it's not all good news. You, the registered estate agents, and your agencies and your businesses are all subject to being regulated by the Estate Agents Affairs Board. That's the bad news. The worst news is that the people with whom you compete, who are not compliant, who are unregistered, who look after people's funds or who accept trust funds illegally, are not regulated at all. Have you ever thought about it that way? Those people that are illegal are not regulated at all. They can do what they want to. I'll tell you as we go along how we are busy addressing that problem. And we are addressing that problem. We're looking at that problem. We're looking at you guys to assist us in addressing those problems. All right? So how does it regulate? It regulates through the issuance of Fidelity Fund certificates to any person carrying on trade as an estate agent. And we'll define what an estate agent is a little bit later. Many of you know exactly what it is that you need to do, but there are some instances where, technically speaking, and within the practical realms of the definition, we don't actually realize that we're doing the work of estate agents. Not only you, but ordinary people such as myself. And theoretically speaking, I need to be regulated by the board, or I need to adhere with to the provisions of the Act. So I've already said the core function is to regulate you guys. So we want to regulate 40,000 registered estate agents. And why do we want to regulate them? We want to regulate them because we believe that in the best interest of the public, they need to be regulated, they need to be held accountable, and somebody needs to exercise control over that. That's where the board comes in. Again, I come back to the point where I say, there's everybody else who's doing the work and who's competing with you and who holds themselves out to be estate agents, who are not registered. I cannot tell you from a practical perspective how many times we have come across something that seems to be an estate agent or a property management business, and we phoned them to set up an inspection, and they said to us, but we're not registered with the board, you've got no jurisdiction over us. Now, when you sit with that, we say, well, are you an agent or aren't you an agent? And they say, well, I'm not a registered agent. We say, well, theoretically speaking, you should be an agent because you're doing the work of an estate agent. In addition to regulating you guys, the board also has the responsibility to comply or to supervise you guys in terms of FICA. So the estate agents, an estate agent is specifically defined in the FICA Act as one of the accountable institutions. And the board has been delegated as a supervisory body in terms of FICA. And I'll tell you some of the stories of FICA when we get to that, but that's really, really interesting, right? When it comes to FICA, we're talking about some really, really interesting stuff. So these are the little stuff that we need to start thinking about and we need to deal with. So the estate agents board is built on 5 regulatory pillars. 1, registration. The board is charged with your registration. The board is charged with registering agents, overseeing agents, holding them accountable, and most importantly, issuing Fidelity Fund certificates. If there is not a Fidelity Fund certificate, the agency is operating illegally, full stop. Full stop. Don't pass begin, don't collect $200, don't do anything like that, it's game over. No Fidelity Fund certificate, that's the story. On the 22nd of December, I was down at the South Coast in KZN, and I got a call from the board's attorney saying, you've just been appointed curator of this agency. On the 22nd of December, it's not the call you want to get. On the 22nd of December, when you're with your family and you're on the beach, you don't want to know about who stole someone else's trust funds, right? Be that as it may, the agency was closed and we were closed and nobody could do anything till the first week of January. When we got back, we went in there, and Patrick was one of the gentlemen walking with me, and we said, the first question we asked was, please show us the Fidelity Fund certificate. The gentleman in charge of the agency duly obliged, and he produced the Fidelity Fund certificate. And everything in the Fidelity Fund certificate was legitimate. It only had one problem. It was dated 2010. All right? And we said, okay, this is not going to work. Right? So that's it, game over, and we seized everything. We walked out with computers, we walked out with files, we walked out with every piece of document that was in there. Now, ladies and gentlemen, when your Fidelity Fund certificate, when someone seizes your Fidelity Fund certificate, the game is over. That's it. You can't trade. There's no grace period for you to inform your clients. There's nothing like that. We call it there and then, and you stop trading. End of story. Okay, the next one is education. It is the board's responsibility to ensure that they provide the necessary education to their constituents to keep them up to date and compliant with what they need to do. Hence these sessions. Hence we must come and listen to Mr. Adam talk and whoever spoke before me this morning. Then disciplinary. It's the board's responsibility to discipline delinquent agents. Now, this is the one where, as a person, I have a fundamental problem. I have a fundamental problem where we're disciplining people who come forward and say, this is the business I'm doing, I need to be regulated in terms of the Act, I need to comply with the Act, I need to do all of these things, and you can hold me accountable for all of that. Yet those people who don't do it and operate outside the ambit of the Act can just get away with everything. Now that's one of the issues that I have, and we need to deal with that. It is the board's responsibility to ensure that inspections do take place. So, ladies and gentlemen, if you haven't been inspected or your agency hasn't been inspected in the course of the last 4 years, I can promise you that you will be inspected in the next 2 years. So you see that you do it, you see that you prepare for it, and you see that you comply at all times. And we'll tell you how to deal with it. We'll make it easy. The idea of an inspection is not to catch you out. And I think that's the one thing that we need to get right from the beginning. The idea of an inspection is to keep you compliant in the right side of the law. And I can tell you from a practical experience that certainly the inspectors in my firm, but I believe the inspectors throughout, actually add value when they go out there. When they see stuff is not the way it should be, or they have recommendations on how you can improve what you're already doing, they sit down with you and they take you through the process and they explain that to you. And from that perspective, I think the board is I don't want to use the word rather forgiving. So let's say that the board is lenient and they actually give you the opportunity to correct what could be done better or what is incorrect. Claims, the Fidelity Fund is there to protect the public against any negligent and malicious dealings by estate agents from where the public may have lost money. The board is the custodians of the Fidelity Fund. The Fidelity Fund, it's almost, think about it as your nest egg. It's your prized asset. That's the one you're sitting with. So it's the board's responsibility to ensure that any claims that are made against the Fidelity Fund are valid claims in the first instance and follow the process in terms of having to get the claims. Then the ancillary one, I said 5 pillars, there's 6 of them. The ancillary responsibility that the board has got is anti-money laundering. It is not brought onto the board through the Estate Agents Affairs Act, but that responsibility comes through the FICA Act and the fact that the board is a designated supervisory body. So, what do we need to look at? In order to understand where we're coming from and how we're dealing with all of these things, we need to understand, one, the Estate Agency Affairs Act, the Financial Intelligence Center Act, and the Estate Agency Affairs Board of Conduct. We'll deal with each one of those separately, and we highlight the salient features insofar as they will impact on your inspections. Now, ladies and gentlemen, the inspections have been designed, and I can tell you that they've been jointly designed by ourselves as the private firms together with the Estate Agents Affairs Board, and that ensures consistency. So it doesn't matter if you've got my firm, if you've got another firm, or if you have an inspector from the board. The fact that the whole process, the whole program has been jointly designed should ensure consistency so that everybody goes through exactly the same. The inspection is designed to cover all the areas of compliance, that of the Act, that of the Code of Conduct, and the Financial Intelligence Center Act. Now, that's important, because as we go on, you'll understand that the FICA Act gives the Financial Intelligence Center, not the Estate Agents Board, the Financial Intelligence Center, the same right to inspect you as what the Estate Agents Board has to inspect you. Now, can you imagine, put yourself in this position if you're running a company that requires an audit. The company requires an audit, so you have the auditors that come in there to do whatever they need to do. If you were to get inspected by the Financial Intelligence Center, they'd come in there to do whatever they need to do. And if you were then to be inspected by the Estate Agents Board, and let's just for 1 second assume that this all happened in 1 year. All you do was work for regulators that year, right? That's all you do. You'd have auditors, you've had inspectors from FICA, and you've had inspectors from the Estate Agents Board. What we've done is we've combined the FICA inspection together with the Estate Agents Affairs Board Section 32 inspection in order to make sure that you're not inundated with all of this. So we cover FICA through the EAAB inspection as well. The definition of an estate agent, and it's important that we understand who is an estate agent. Because an estate agent is not anybody who is registered with the Act. That is not an estate agent. An estate agent is any person, so let's just analyze it as we go along. Any person. It doesn't differentiate between a natural person and a juristic person. So it could be a person or a company or closed corporation, etc. Who for the acquisition of gain for his account or in partnership. So you've got to be doing something for the acquisition of gain to meet the definition of an estate agent. In any manner holds himself out as a person. So you hold yourself out as a person or as an agent who directly or indirectly advertises that he, on the instructions on behalf of any other person, buys, sells, lets, hires, or financially manages immovable property or any business undertaking. What's interesting about that? An estate agent is anyone who does any of those things, irrespective of whether or not they are registered with the board. All the registration of the board does is actually show that you're in compliance with the Act or you're not in compliance with the Act. That basically makes you a legal agent or an illegal agent. So you could still be doing estate agent work illegally if you meet that definition, but you're not a registered agent. Okay, is everybody with me? Right, here's an example. I own a block of apartments in Bantry Bay. That block of apartments is owned by a closed corporation, and I am a 100% member of that particular closed corporation. As an individual, I advertise those apartments to let. I collect the rentals, I do whatever I need to do, and occasionally when I get an offer through the sectional title scheme, I sell an apartment. Am I an estate agent or am I not? In terms of the definition, yes, I am. Can you imagine how many people in this country have, for tax purposes and for many other purposes, estate duty purposes, structured their investments such that properties are domiciled in companies, closed corporations, and trusts? Are they all estate agents? Yes, they are. And do you think they're all registered with the Act, in terms of the Act? Absolutely not. Right? Practically speaking, does it make sense for me to be registered with the Act? It doesn't. If I'm the only one that's there, I don't think it makes sense. From what I understand, the entire Act is being overhauled. We expect the first drafts of that to come out in 2017. So it's a long way away. But it's going to bring a lot of things to the fore. For example, it will also bring to the fore the idea of developers who currently don't have to be registered in terms of the Act. So it will bring that to the fore, and we'll start getting it right from there. Interestingly enough, when we look at all of these things, when we look at inspections, and I think it's important that we understand this, inspections are dealt with on a database that we get given from the Estate Agents Affairs Board. So let's just for 1 second assume that we have the Western Cape area. The Estate Agents Board gives us a database and say, these are all the registered agents. From there, you need to go and do the inspections. So they give us the database, and we go and do the inspections. What's the flaw in that process? We're leaving out all the illegal ones in that process. And now I can also go one step further and say to you that our mandate from the Estate Agents Board is to say 90%, at least 90% of all the inspections you've done must come from this database. And of course, we take into account the necessary rotation. If you were done last year, you won't be done this year, etc., etc. But they also say to us, the additional 10% that you do must be people whom you think are marketing, selling, letting, or whatever property that is not on this database. Now, what does that do? That allows us to target those people. So, and we've done it. We've literally had inspectors that stopped at a robot and seen on the corner there's what appears to be an estate agency or a managing agency there, and actually went in and went to go and do an inspection. And there are cases where we said to people, well, you're trading illegally. We reported them to the board. We investigated them. We found out that they've got no controls in place. They're not accountable to anyone. They do exactly what it is that they want to do. So that's what happens in real life. Okay, so those are the kind of things that one needs to consider when we think about the agents and how we deal with it. Section 26 of the Act says, no person shall perform any act as an estate agent unless a valid Fidelity Fund certificate has been issued to him or her and every other person in their employ. So I come back to what I said all the time. No valid Fidelity Fund certificate, no trading. That rule is very simple. If you don't have that, you don't trade. Now, let's deal with the administrative issue. How many of you are still waiting for your Fidelity Fund certificates from the board, where you've paid, etc., but you haven't got your certificate yet? Your interns. Okay, so we have 1 year where the interns are waiting for the certificates. Ladies and gentlemen, from an inspection perspective, we take that into account. So if we get to you in January or February of a year, and in that year, you don't yet have your certificate, but you can prove to us that you paid the necessary fees and that you've been corresponding with the Estate Agents Board in order to get your certificate, we don't look at that as a breach of it. As long as you've done everything from your side, we don't consider that to be a breach. For information purposes, the way these things generally happen, you have an inspection, the outcome of the inspection is communicated, we decide from there whether or not the agency is compliant or not compliant and the extent of the non-compliance. That all happens within the board. And then we decide whether or not, in the interest of the public, whether or not that agency should continue trading. If we decide that it's in the best interest of the public for that agency not to continue trading, we then make an application to court to appoint a curator to seize all the funds on that. When the curator comes in, the first thing they do is remove the Fidelity Fund certificate. Because you have no Fidelity Fund certificate, you can't trade. That's it, end of story. All right? But as we go on, I'll also tell you about the duty that you have to many of your clients to educate them on how to deal with things. The question is, where we find people trading illegally outside of the ambit of the Act, when we do find them, do we have any recourse against them? It's criminal. Right? So we actually go, they're breaching the Act, we bring charges against them on that, and we take that forward. I must say that in the general course of things, it takes a long time to get it done, to build the case, but it does happen. It does happen. We actually build the case against them, we go take them on holding out, breaching the Act, and then pressing criminal charges against them. Sir? The question is, if we know about illegal agents, can we report them using the whistleblower number? More than yes, you may. Please do so. We want to know who these people are. We want to root them out. Right? Okay. How do we disqualify estate agents? Or how don't you get to qualify in terms of the Act? Where you've been removed by way of improper conduct from any position of trust. Again, the discretion is on the Estate Agents Board in terms of what would be a position of trust and whether your conduct would be improper. Has at any time been convicted of an offense involving an element of dishonesty. Ladies and gentlemen, element of dishonesty, again, we've got to apply our discretion on that. A parking ticket is not something that would ordinarily discount you from being an estate agent. Is an unrehabilitated insolvent, I think that's clear. Is of unsound mind. I must tell you, this is my 11th session that I've done. And I sometimes wonder why any of you are sitting here, right? If I take some of the questions and stuff that comes from there, I wonder why any of you are registered estate agents with that one that's in there, right? Which does not comply with the required or the prescribed standard of training, which means if you don't come and listen to me once a year and get your 3 points from it, I'll make sure that that doesn't work. And you've been found guilty of misconduct by the EAAB. Now, one needs to think about what is guilty. If you've been found guilty of misconduct, yes, you know, you may have something on an offer to purchase that on a sole mandate that you didn't disclose. And how material is that? So all of those things get considered. But when you go to Grand West Casino with a debit card on your trust funds, ladies and gentlemen, and you draw 10,000 bucks at a time out of there and gamble it away at Monte Casino, I only have one thing for you, all right? Where you are using your client's funds. And I can tell you the example that I keep on referring to is this lady managed 20 body corporates. 90% of all the people in those body corporates were pensioners and the elderly that trusted her with their lives. With their lives. When we met with them the first time and we said to them, look, this thing is happening, people said to us, right, this woman has done so much for us, it's impossible, she couldn't have done this. Right? But things like municipal accounts that weren't being paid, council was phoning us, they were going to cut off accounts because there was $1 million outstanding on on one of those body corporates. Now, ladies and gentlemen, let's be honest and let's be frank with ourselves. For those of you that are running honest, good, clean, compliant businesses, somebody like that deserves to go to jail. Right? They deserve to go to jail. It's as simple as that. And certainly from our side and that of the board, that's the message that we want to get out there. Okay, in terms of the Act, and here we get to the important stuff. In terms of Section 29, every agency has a duty to keep proper accounting records reflecting, one, all business transactions that they have in a financial year. Two, the business financial position, because we want to see what the sustainability of that particular business is. Can it go on? Won't it go on? And we need accounting records that clearly reflects what funds are held in trust of your clients. That is probably the most critical part, is we need the accounting records in sufficient detail that they can reflect the amount of trust funds that is held. Section 32, trust accounts. Every estate agency shall open one or more separate trust account. Now, ladies and gentlemen, let me get my favorite argument or my favorite debate in all of these things. How many of you believe that you can adequately run and manage a sizable agency? And let's, for example, just talk about a property management company that manages 100 different body corporates. And let's for 1 second assume that every different body corporate has got 100 units in those body corporates. How many of you believe that it is the best way to manage it all through one single trust account? In terms of the Act, strictly speaking, you need one trust account to comply. You don't need more than one trust account. From a personal opinion perspective, and probably in my mind from a best practice perspective, it would be wise to have individual trust accounts for the body corporates that you do manage. The reason I say that is from practical experience, we've seen that the cross-subsidization and contamination of funds that happens when you put all of it in one single trust account just becomes, at some stage, too much to manage. I'm not saying it can't be done, sir. Right? And I think anybody that is meticulous in their accounting and their bookkeeping of those things, it can be done. But I've seen more cases where it actually goes wrong than it stays right. So, food for thought. I'm not saying because tomorrow ABSA, FNB, and Nedbank will have an influx of trust accounts. I'm not working for any of them. I'm not advertising for any of them. That is purely your decision, but we need to think about it. Every estate agency shall cause its accounting records contemplated in the Act to be audited by an auditor within 4 months of year end. So by the 30th, if you've got a February year end, 30th of June, your audit reports need to be in. Quick question. Up to how many of you manage your agencies through closed corporations? Okay, there's a couple. Anyone partnerships, sole proprietors, etc., etc.? One, two, just a few. So the vast majority of you are running it through companies. And if you're running it through companies, you've always had your business account audited. Right? For those of you that were running closed corporations, how many of you, up to a few years ago, didn't actually have the business account audited? Huh? Because the auditor said it's a closed corporation, you don't need an audit. Right or wrong? Right? Clarity on that. Your business account needs to be audited, whether you're a closed corporation, company, sole proprietor, or partnership. We know that in the past, many people didn't audit the business account because the auditors misinterpreted the Act to say that you just need an audit on your trust account, not on your business account. It's very clear you need an audit on your business account as well. Now, they're strictly enforcing the fact that we want the business account audit done as well. Section 32A of the Act. Now, 32 deals with your accounting records. 32A of the Act is where we come into play. 32A of the Act is what gives the board the power to inspect. And it says, any inspector furnished with an inspection authority in writing by the board. So the first thing we look at is when an inspector phones you to set up an appointment, ask them for the authority in terms of which they're setting up the appointment, right? We know what's happening. We know there's people. I mean, there's officials from SARS walking around with official SARS papers going into people's business premises and doing what they want to and leaving from there. So ask for the inspection. You have a right to ask for the inspection or the authority that they're inspecting under. May conduct an investigation to determine whether the provisions of the Act, and again I come back to what I said, the purpose of the inspection is not to catch you. The purpose of the inspection is not to find out how often you go to Grand West Casino, right? The purpose of the inspection is not to find out what your lifestyle is. The purpose of the inspection is to find out whether or not, as a business, you comply with the effects of the Act. We're nice people, so we actually phone and we set up an appointment and all the rest of it. We don't have to do it. Right? In terms of the Act, without any notice, we can walk into a business premises and say we're here to do an inspection. And I think it's important that we understand that, because there are cases, and that is particularly where we walk in on those unregistered businesses, where we see them, we walk in, we seize, we take what is that we need to do. At all reasonable in the times. Now, I don't know about you guys, but generally my work night ends at about midnight, so for me that's reasonable. It's not reasonable for everybody else. So we can enter any place in respect of where we have reason to believe. Right, so we don't have to go into an estate agency. We can go into any business where we have reason to believe that any person in that business is performing an act as an estate agent, or that that person is connected, or that business is connected to an estate agent, where there are any books, records, or other documents to which the provisions of the Act are applicable. So anything that we believe, and that's all we need, is we just need to believe that this is what's happening. We don't have to prove it. The onus of proof doesn't rest on us. The onus of proof rests on you, right? We can order any estate agent or their manager or employee of that estate agent to produce to us the Fidelity Fund certificate. Ladies and gentlemen, the first thing we ask for, and I reiterate it, is your Fidelity Fund certificate. If you can't give us a Fidelity Fund certificate, then you tell us why you can't give us a Fidelity Fund certificate. And if you say to us, I've paid and I've spoken to that one and I've spoken to that one, and there's all the stuff and you can prove that to us, that's fine. If you can't, we will close the business. To produce to us any book, record, or other document that's in your possession. So we'd ask for anything. We can remove anything, right? So we can take anything we want with us. It's not that bad. I promise you, when I get there, you'll realize it's not that bad. And we can remove anything provided that we give you the opportunity to make copies of what it is that we take with us. Now, ladies and gentlemen, if any inspector walks in and takes stuff, please make sure that you make copies of those things to protect yourself, and make the inspector sign for what he is removing from your business. Right? It's important that you do that, just in case something goes wrong somewhere along the way. So we can examine any books, we can take anything with us. I've spoken about all of this. I'm not going to spend a lot of time on it. Let's get to the Financial Intelligence Center Act. Very simply, the purpose of the Financial Intelligence Center Act is to establish a financial intelligence center and a money laundering advisory council in order to combat money laundering activities. Now, ladies and gentlemen, when you just read it up to there, doesn't this thing sound draconian? Doesn't this act just absolutely sound draconian? And you wonder, but what am I doing? Do I actually want to be in business when people start holding me responsible for money laundering activities and terrorist-related activities and all of those things? You actually wonder if you're in the right business. Really, you actually wonder whether you're in the right business. But very simply put, they establish a central center assist in combating money laundering and terrorist-related activities and the funding thereof. Now, I find it absolutely, difficult to believe that every time someone comes to you with what seems to be an unusually good deal, that you're going to ask them, tell me something, are you breaching the Organized Crime Act? Or are you breaching the Promotion of Access to Information Act? When you look at all of these things, it happens, but nobody's going to own up to it up front when they get to you. Right or wrong? Right? So you need to apply your minds. The important thing about FICA, and your responsibilities in terms of FICA, is that you do not have a responsibility to go investigate the person you're dealing with. Your responsibility stops before then. The person needs to identify themselves and need to give you a proof of address. You don't have to go and find out whether that address exists. You don't need to go and verify whether the passport that is given you was actually registered or issued by Home Affairs. So those are the stuff that FICA is all about. The objective of the center is to identify the proceeds of unlawful activities and the combating of money laundering and financing of, I mean, you read that, it's mind-boggling, actually. What are we all? We're simple people. We'd like to believe that we're professionals and that we're running good, honest businesses. That's what it comes down to at the end of the day. All of a sudden, we have this added responsibility that if something is not the way it should be, or if something looks out of place, then we have a responsibility to report. And that's what FICA gives us. It gives us this responsibility. Now, where do we get this responsibility in terms of FICA? I mean, how many of you actually want to be responsible in terms of FICA? I don't think anyone in their right minds wants the added responsibility. But in terms of the Act, we are specifically listed as estate or as accountable institutions. So every estate agent is an accountable institution in terms of FICA, and they have to report if they need to in terms of FICA. Interestingly enough, if you look at that list, what's not on there? Auditors. In terms of FICA, we have a duty to identify our clients. So an accountable institution may not establish a business relationship. So as an accountable institution, you may not establish any business relationship, which means you can't transact with someone. You can't do any business with somebody, or even one single transaction. Now, why do they bring in one single transaction? Because a business relationship would denote an ongoing relationship between two parties. A single transaction takes away the concept of relationship and says even if you just had one transaction with somebody, you shouldn't have that unless you've taken steps to establish, verify, and identify the client that you're dealing with, where that client is dealing on behalf of a third party. So the example that I often use in this particular one is there is a Chinese company who wants to invest in the Western Cape, and all they're doing is busy buying up property, so they deal with a number of you guys. We need to establish from the agent that we're dealing with, or the lawyer that we're dealing with, or the accountant that we're dealing with, whoever we're dealing with, that we can verify who they are, that agent is, and verify who the person is that they're dealing with. Now, ladies and gentlemen, right at the beginning I told you about this single lady who is a school teacher who found out that she owns 4 properties. And that was purely by chance. The way this thing unfolded was this lady she's single, she's divorced, and she had a maintenance issue. And all the lawyer did was did a property search on her. And he came up with a history of all the properties that she's owned. And she owned apparently 4 properties. And 2 of them were sold, and 2 of them were still in her name. And you all know about Murphy's Law and how Murphy's Law works. It just so happened that 2 of the properties that she owned happened to be registered by another firm of attorneys who were 2 doors away from the attorneys that she consulted. So what does Murphy's Law do? Murphy's Law brings in the fact that the 2 attorneys had a rather good relationship with each other, so it meant nothing for the attorney she was consulting to take a walk 2 doors down and say, listen, you had these 2 transactions. Can I please take a look into it, because I think there may be an issue in it. And when they do pull the transactions, the files, they look at the files, and in those files are the offers to purchase, not signed by this lady, but a clear forgery of a signature, a copy of her identity document on the transferring files, the forms that go into SARS signed by herself on those prices, right? As it all turned out in this particular instance, all these things were done by her ex-husband, right? All of these things were done by her ex-husband. More importantly, they were done by the ex-husband after the divorce was finalized. Right. Now, when we think about it like that, do we now see where FICA comes in? Because if the attorney and the agent who was involved asked for the person, not only accepted a copy of their ID, but also verified them against their ID and the address, they would have had to speak to this lady. Had they spoken to this lady would have said, but I didn't sign those things, I didn't buy those properties, etc., etc., etc. And that, ladies and gentlemen, is where FICA comes in. But more importantly, is what do we do when we are faced with that? Can you imagine that dreaded call? Some oak that phones you and says, listen, I work for so-and-so terrorist organization, and we're about to bomb out half of the Western Cape, right? But we need a base to work from, and we'll pay cash for it. Can you imagine getting that call, right? So those are the kind of things we need to think about. Now, what does FICA say to us? FICA also says to us, you must keep records. And you think to ourselves, how many records must we keep? How many terrorists in the world are there that we've got to deal with? But, I mean, this is all we're doing is we're being regulated. So when you, the agency, the accountable institution, establishes any business relationship or concludes a single transaction, what do you want? You want the identity of the client. You want to see who the client is. Your records need to reflect what the nature of the business transaction is. So if the business transaction is we're going to buy up all of Woodstock for $1 trillion in cash, then your records need to reflect that. You also then need to act on it. The amount involved and the parties to the transaction, your accounting records need to show that. And all the accounts that are involved in the transactions concluded by the accountable institution. So you basically need to have records of every single transaction that you've done through the year. FICA does realize that printing and paper costs money, so they say you can keep the accounts electronically. However, it also goes on to say that where you do maintain your accounts and your records electronically, the single biggest aspect that you need to be aware of, is that you, the accountable institution, are responsible for those records. You need to have control of those records. If you are not in control of those records, you're going to have an issue. So while you have the dispensation, you can store them in the cloud or store them in the moon or store them wherever you want to store them electronically. You need to have access to them at all reasonable times, and you need to have control over those records, and that needs to happen. Incidentally speaking, related but not related to that particular matter, I spoke about the possible rewrite of legislation in the next 2 years or in the next couple of years. One of the things that may come into the rewrite, as far as I understand it, is that in the future, and I know that the CEO of the board, Brian Chaplog, has been lobbying this quite significantly, is to say that when it comes to a property transfer, if the agent involved doesn't provide a copy, well, certified copy, of their Fidelity Fund certificate to the agents, to the conveyancing attorney, sorry, that transfer shouldn't be allowed to go through. Now that is going to have very far-reaching consequences for those people that are acting illegally. Question there? It's envisaged to be a rewrite of the Act. As I understand it, at this point in moment in time, Brian Chaplock has actually been engaging with the Deeds Office to check whether they could do it at that level. And, you know, unfortunately, everybody's worried about their little domain. There's not very many institutions that are looking at the bigger picture and say, but if we work together, we root it out for the greater good of everybody. So that's one of the things that we need to work with. Yes, sir? Well, that's going to be a very interesting one. You see, but that's where the consumer education comes in. That's where we need to advise consumers that when you are renting or when you are dealing with holiday accommodation, etc., 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 make sure that you're dealing with credible agents, agents who are registered. Confirm their registration with the board. Make sure that you're dealing it. Interesting you bring up the question of holiday letting. About 3 years ago, 4 years ago, in fact, the same year we did the AdProp thing when I was down at the KZN South Coast in December. What actually happened to me was in about June of that year, I booked the year-end accommodation through a company or an agency in Umhlanga in Durban. And 5 days before I was due to go down with the family, I was actually told that my accommodation was given away and they overbooked it and the agent just disappeared and all the rest of it. And that was my fault. I didn't check on the agency or the credibility of the agent. In terms of Section 26, I've spoken about it. This is where a FICA representative also has the right to walk in and inspect you whenever they want to. Yes, ma'am.
Sorry, if you're mainly on a holiday accommodation, do you also need your Fidelity certificate and all these examinations and stuff?
My answer to that is yes.
Thank you.
All right, in terms of the Financial Intelligence Center, when do we have a duty to report? One, where there's cash transactions above the prescribed amount of 25,000 rand. Now, given that FICA came out in, what was it, 2001 or something, somewhere around there, 25,000 rand is not a lot of money. And I must tell you that from experience, we haven't come across a lot of cash transactions. Are there any of you that still do cash transactions? Okay, so cash. You don't handle the cash. Cash goes via the bank, etc., etc., etc. We had a case recently where a client walked in with 2 briefcases full of notes to pay the transfer duty, right? But you know what they did in that particular case? The conveyancing attorney was actually clever, and he said to the client, "Come, I'll accompany you to the bank." So you move the onus of identifying the client from yourself to the bank, and let the bank do it. That's what they deal with on an ongoing basis. Let's be honest, 25,000 rand isn't a whole lot of money. Electronic transfers to and from the Republic in excess of the prescribed amount of 25,000 rand. Now this is an issue. This becomes an issue when you have property owners and landlords who are overseas and they need to fund renovations and repairs and maintenance, etc., in their own businesses. The trick to this particular one, is let them open a bank account in South Africa. So if they want to get funds into South Africa, they transfer to their own accounts. When they transfer to their own accounts, the onus is on the bank to do the FICA stuff. Where they transfer into your trust account, the onus is on you. So you actually put their account in the middle to take the onus away from you in terms of reporting. Property associated with terrorists and related activities. Now, ladies and gentlemen, again, you get to the point. Trust me when I tell you, when the guy is a terrorist, he's not going to tell you he's a terrorist, right? You're going to find out some other way that he is a terrorist. Then you know you're dealing with somebody who you should be careful of. Suspicious or unusual transactions. Now, what do we classify as suspicious and unusual transactions these days? I mean, the world has gone crazy in so many different ways. What's suspicious and unusual? Remember in the old days when you were selling property and the buyer said, and let's for example say you were selling a property for 2.5 million rand, and the buyer said, can't we just put on the paperwork 1 million rand, right? And I'll give you the rest in cash, right? So that we can reduce the transfer duty burden on that. In today's times, that is suspicious. Please, we need to report those things. That's what it comes down to. In days gone by, that was the way of doing business. In days gone by, that wasn't a big thing. It was commonplace to do that kind of business. So those are the kind of things we need to look at. We need to apply our minds to what is suspicious and or unusual transactions. Section 42 and 43 talks about measures to promote compliance. You need to register as an accountable institution. How many people sitting here are not registered as an accountable institution? Okay, we have come across some in our inspections where the agents just haven't kept up to date with developers or with developments, and from that perspective just didn't know that they needed to register. The appointment of a compliance officer. Ladies and gentlemen, in a small agency, the owner may be the compliance agency, the compliance officer. We ask the question, and when we ask the question, have you appointed a compliance officer? Do me a favor, just for the purpose of completeness of your files, go and draft a letter to appoint yourself as the compliance officer in terms of the FICA Act. So even if it means you're writing to yourself, go ahead and do it. Formulation and implementation of internal rules. Now, ladies and gentlemen, when we talk about internal rules, the Act prescribes that you must have rules to ensure that the people that works in your agency are aware of those rules so they know when to report and when not to report. For example, if a guy with a trench coat and dark sunglasses and a hat walks in with a suitcase full of cash on a day when it's 42 degrees in Cape Town, right? Something looks suspicious. Your receptionist or your administrator or your manager or whoever it is would need to know what they need to do in that particular instance. And that's what internal training and internal rules is all about. What I'm not saying to you for 1 second is you don't need a set of rules this thick. Right? It's a simple document saying, if A happens, do B. If B happens, report it to the owner so that they know what to do, etc., etc. So it's simple, 3-4 page document, that's your internal rules. It doesn't have to be a document that looks like the American Tax Act. The Estate Agency Affairs Board Code of Conduct. The first one is that we have a duty to protect public interest. First and foremost, that is what we need to do. We deal with the public, so we need to ensure that this profession is built on the pillars of honesty, integrity, and that the reputation stays intact. We need to look at the mandates and the duty to disclose. Do we disclose things on the sole mandates that we need to disclose? Do we disclose to our clients what they need to do to make informed decisions of the transactions that they're about to enter into? The code deals with misrepresentations and harmful marketing techniques. Now, again, it's up to you to exercise discretion of what is harmful marketing techniques. Would you significantly, or when you take a client out for lunch in an attempt to influence them to conclude the offer, would that be a harmful marketing technique? No, I don't think so. Right? What would be a harmful marketing technique is when the guys, when you invite the client to your office for a cup of coffee to discuss the proposed deal, and the door closed behind them, and there stands Jaws with a baseball bat. Right? That would be a harmful marketing technique. So, again, apply your minds with what we're doing on those things. Duties relating to offers and contracts, we all know about what those duties are. We all know what we need to do. We all know what we need to disclose insofar as those contracts go. We know what sole mandates and what information sole mandates may have. Incidentally, talk about ethics and code of conduct. Introducing a fee to cancel a sole mandate. How legal is that? Anybody? Why is it illegal? It's not illegal. It's not illegal. You got to say it up front. You've got to say to anybody, I've got a sole mandate for a period of 3 months. If you cancel at any time within those 3 months, that's the fee that's payable. But it can be done, but it must be disclosed. Absolutely correct. Prohibition against undue influence, and that's the one I spoke about. Anyone with a baseball bat will appear to be undue influence. Remuneration, and we deal with remuneration, how our commission needs to be disclosed and how we need to talk about whatever fees we're going to charge. Trust money and interest, we need to know about trust money and interest. We need to disclose whether or not we're obliged to invest in an interest-bearing account on behalf of a potential client. So we need to take that into account. And ladies and gentlemen, like auditors, lawyers, etc., everything needs to remain confidential. Right? Everything in our business dealings needs to remain confidential. Unless you have a duty to report in terms of FICA, right? So, okay, I'm not going to spend much time on the education and training. I think you guys know all of these things. The only thing that I want to point out on this particular one is that over a 3-year cycle, you need 45 verifiable points, 15 non-verifiable points, and that translates over 1 year to 15 verifiable and 5 non-verifiable. So, ladies and gentlemen, how do we make up our non-verifiable points? Verifiable is easy. We come here, we sit and listen to people like myself that talks about all of these things. It's the non-verifiable that you need to think about how you make it up. And you can make it up through professional development. What is professional development? Again, it's a subject of opinion, but you need to have a portfolio of evidence to support it. So professional development, personal development. Whether you read books or relevant articles or coaching books or one of the things that I do is there's a number of professionals, and there's 1 or 2 agents in there that we coach on a quarterly basis, and we sit down with them and we have a conversation about where they are in their business and what their business is all about, and can they improve their business and can't they improve their business. And we minute those meetings, and those meetings form part of the portfolio of evidence. So it's stuff like that that we do. Mentorship and coaching, I think that falls in there, where you mentor someone. And mentor someone doesn't mean that you need to go and sit with a person, have a meeting with a person, have lunch with a person. Mentoring is someone that's there as a critical sounding board for you. As long as you can prove that that is what you've actually done. And then corporate social investment. I've listened to people from the board in previous sessions, and the question is, for the benefit of everybody, how many readings would qualify for the 5 points as an example? And it almost goes to 1 point per relevant paragraph in terms of what you're doing. That's what came out of the last one. But you must be able to have an extract of that, highlight the paragraph that's relevant, etc., etc. So you've got to produce the portfolio of evidence. The problem with that portfolio of evidence is that currently it is not prescribed. The format of it is not prescribed. So you've got to do what you've got to do to make sure that you get there. And then reading and publishing, right? If publishing is your thing, then you've got too much time on your hands. Compliance inspections, where does it come from? The EAAB is obliged, in terms of the mandate, to maintain and promote the standard and conduct of estate agents and to regulate your activities, having due regard to public interest. And this is what it's all about. It all comes down to public interest. We wouldn't need regulations if you were not dealing with public. If all of you were dealing with each other and there was nothing else to deal with, we wouldn't need to be regulated as a profession. The EAAB also has the added responsibility, since it is a supervisory body designated in terms of FICA, to oversee you guys insofar as FICA is involved. Now, when we look at the whole concept of intern or compliance inspections from an estate agency point of view, what happens? The compliance inspections are performed by an internal inspectorate, so the EAAB have their own inspectors. However, from a capacity perspective, to supplement their own inspectors, they have a number of external service providers. Now, our company is one of those, but we're responsible for certain provinces in the country, and there's a number of other companies who are also responsible for that. Now, I want to reiterate what I said earlier. When we developed the inspection approach, we developed that jointly with the Estate Agents Board. So theoretically speaking, whether your inspection is performed by an external service provider or by the Estate Agents Affairs Board themselves, it should be exactly the same. There should be no difference in approach. There should be no difference in documentation. There should be no difference in anything. It should be exactly the same. The types of inspections that do take place is the routine compliance inspections. Routine compliance inspections is in a cycle of 3 to 5 years, you will be inspected going forward. So you plan for that. There may be instances where you will be reviewed more than once in 3 to 5 years, but that would be exceptional rather than the rule. That would be because somebody thinks you did something wrong, there's a specific complaint against you, something along those lines. And that's where the second type of inspection comes in, through the tip-off or complaint-based inspection. So what happens is the EAAB's got the tip-off's anonymous line. Through there they get calls from the public, and they act on these calls. Alternatively, certain agencies and certain members of the public contact the EAAB directly without anonymity and inform them of certain complaints. And they use that to then direct a specific inspection. Now, to give you an idea, we've had cases that were reported to the EAAB, for example, of a certain landlord who advertises a property on Gumtree. And once the property is advertised, 3 or 4 different potential tenants all want the property. They all pay deposits into the landlord's account to secure the property, and when they show up, the property doesn't exist. Right? It doesn't exist, the cell phone is off, etc., etc. But what that does is that points out the responsibility that we have. When I say we, I talk about us as a collective, all of you, the board, all stakeholders in the board, to educate potential clients on what they should do. I mean, it's just silly to pay a deposit without verifying the existence of the property, without verifying the existence of the agent. And if you do things like that, you're likely to lose money as life would have it. So what happens if we don't comply? What happens if we do something wrong and an inspector comes to you and an inspector comes up with a number of findings where you don't comply? In terms of the Act, the Estate Agency Affairs Act, you could simply get a slap on the wrist that says, well, don't do it again, so we'll reprimand you like that. Alternatively, and before I get there, by way of process, the inspector comes to you, the inspector does your inspection, and it can go anywhere from half a day to 2 days, depending on the size of the agency and the state of records. They do the inspection. Once that inspection is done, a report is compiled with you. In just about all cases, the findings in that report is discussed with you, right? Even before the report is submitted to the EAAB. When the report gets to the EAAB, they have a look at the findings and they acknowledge or they respond to you saying, your inspection has been done. Out of your inspections, we found A, B, and C. Please don't do it again or take the necessary steps to have it corrected. From a balanced reporting perspective, when we report to the EAAB, we don't only tell them what is wrong. We also speak to you to commit to fixing it up. And in some cases, we advise you on this is what we think you should do to fix it up. And we include that in our report. When the agents put it in, we include it in our report. Now, ladies and gentlemen, when I say we include it in our report, we say we've had a discussion with Mr. or Mrs. So-and-so from the agency, and they have undertaken to have it corrected. Where they correct it before we even get in, before we submit our report, we actually report to them. They've taken the necessary steps to correct it. So it's not about catching you all the time. You could be subject to a fine up to a maximum of 25,000 Rand for each and every charge. Right? So 25,000 Rand is one thing, but if you have 4 charges, it's 100,000 Rand. It just becomes a different picture completely. Where it is serious, right? So where we found that someone's been diddling in their trust accounts, where we find the trust account statements having narrations like Pick and Pay on it, etc., we report those things, and there the chances are you're likely to lose your Fidelity Fund certificate. So what I said earlier, when you lose your Fidelity Fund certificate, that is where you close down. That day, it stops right there. We've had cases where we've removed Fidelity Fund certificates, and I literally stood in a room like this, facing the trustees of 70-odd body corporates, and having to explain to them that your managing agent is no longer trading, please go and find someone else. And they all say to me, what's the first thing that your managing agent, your trustees are going to ask you when you tell them that? Where's our money? Where's the money in the trust account? And that's the bad part. That's the part I've got to stand in front of them and say, well, we don't know where your money is. We're going to find it first. Right? If we can find it first. Right? So those are the kind of things that they will be faced with. And then finally, criminal prosecution. I can tell you for a fact that the lady with the Monte Casino habit is currently charges are being pressed to criminally prosecute her. And that, in fact, came out of our recommendation in terms of our final report, that the extent of what can only be called theft or fraud was to such an extent that there's no option but criminal prosecution. All right? From a FICA perspective, if you don't comply with FICA, you could be involved for a fine up to 10 million Rand or up to 15 years imprisonment. Right? That is for a fine of not reporting or not identifying money laundering activities or terrorist activities when you ought to or should have known that's there. Where you have an administrative error in terms of FICA, they have a lesser fine. Right? It's only 5 years or 1 million Rand imprisonment. Right? So the choice is yours. Right? Again, when you're dealing with a sledgehammer from Siberia, then it's a choice, 15 years or report. That's the choice that you need to make at the end of the day. All right, so what do we look at when we look at your inspection, ladies and gentlemen? We look, the first thing, and I've said it time and time again, we look at your Fidelity Fund certificates. We look to see that they are valid. So the fact that you were once a registered estate agent in 1982, right, that Fidelity Fund certificate doesn't work. We want the one that says 2015. That's the Fidelity Fund certificate we want. Where you are operating from business premises, your Fidelity Fund certificate needs to be displayed prominently. Now, how many of you work from home? Well, we have a few. Where's your Fidelity Fund certificate, man? It's on the wall, so it's there, and whoever comes in can see it. That's important. We do not accept an excuse that because I work from home, the Fidelity Fund certificate is in the bottom drawer of the chest of drawers, right? So whoever comes in to deal with you as an agent needs to be able to see the Fidelity Fund certificate. Again, we are not unaware of the fact that there have been administrative delays and administrative bungles on the part of the EAAB, and from that perspective, we take into account what steps you have taken to correct that. For example, they haven't issued a Fidelity Fund certificate or an intern's Fidelity Fund certificate. We look at whether you've paid the prescribed fee, whether you've communicated with them, have they communicated back to you. And from that perspective, we don't find that as a finding. We also look at the trading details that is registered. So we, from the database that we get from the Estate Agents Board, they have all your trading details on there. We look at those trading details and we compare those trading details to the trading details as you have them on your business. In many instances, and this applies for trading details as well as contact details, In many instances, we found cases where the trading details have not been updated on the estate agent board's records. And in those instances, we look for the correspondence that you have, that you did actually update it with them. Where you are found not to have updated, so it wasn't, you didn't update it on your side, or you moved business premises and your phone number changed, etc., and you didn't update it, we advise you to update it with immediate effect. If you did in fact update it, we also go to the estate agents board and we say to the estate agents board, we've got all the records, we've got all the correspondence, this agent did what was expected of them to do, you didn't do it on your side. So we report it both ways. We look at trust accounts. First of all, the existence of trust accounts. How many of you have had your trust accounts dormant and have had them closed because they remain dormant? 1, 2, is that all? 3. There's very few of you. But in the instances where you've got a dormant trust account, it's up to you to keep them activated. Remember, even if you do not use your trust account, even if you're using the accounts of conveyances and attorneys for things like deposits, etc., the onus is on you to have a trust account to comply in terms of Section 32 of the Act. If you don't have a trust account, you don't comply, full stop, and we report accordingly. The next one is the trust account needs to be suitably designated as a trust account opened in terms of Section 32.1 or 32.2 of the Act. Now, again, we've come across a number of instances where there is a trust account, but it's not properly designated in terms of the Act. You need to make sure that that trust account is designated in terms of the Act. Right. We've come across cases where dormant trust accounts, anyone? That have a trust account purely for the purpose of complying with the Act? 1, 2, there's a few of you. And what happens? The banks don't understand the concept of please debit the business account with the bank charges. They still debit the trust account with the bank charges, dormant or not dormant. So what do you have to do? You have to top up that trust account all the time to keep it going, right or wrong? And that goes across all 4 big banks. Every single one of them have exactly the same thing. So ladies and gentlemen, you need to make sure that you cover the bank charges on those trust accounts. And finally, we look at the correct treatment of trust accounts. Now, what am I talking of trust funds? What am I talking about? When any funds received by an agency is not their funds in terms of their remuneration or fees that they can charge, those funds must go into the trust account first. It must go into the trust account. So we've come across cases as examples that says we receive a rental on the 1st of the month. Within 24 hours, the rental is transferred from the business. So we receive in the business account. Within 24 hours, we transfer the tenants or the landlord's portion to the business account. That is incorrect. Right? All funds that you received, where a part or all of those funds belong to a third party, must be received in the trust account. It cannot go to the business account. If I am an estate agent, right? If I were an estate agent, very simply, right? I want to control the trust accounts on behalf of my clients. It's as simple as that. That's the way I see it. So PayProp, I've got a receipt from another one called, or an email from PayConnect or something along those lines. Or so there's a number of these third-party outsourced trust accounts. The problem is, what happens if money from a third party or belonging to a third party comes into your business account? It deems your business account to be a trust account. The minute funds is received in a bank account that doesn't belong to you, that bank account is deemed to be a trust account. Does that make sense to everybody? It's not your funds. If you're taking third-party funds and you're putting it in your account is a trust account. It's as simple as that. We look at interest on trust funds. We look at how we maintain our deposits. From an inspection perspective, what I would do is we would look at all the correspondence and make sure that you've corresponded with them, and we would detail it as such. So, one, you're in compliance because you've spoken to them, etc., etc. From a practical business perspective, what I would do is open the new company, get the new Fidelity Fund certificates, and then deregister it and send back the old ones. Is the pay-prop trust account open in terms of section 32(1)? And can you prove that? Right. If you can prove that, you're in compliance. Financial management and accounting records. So we look at all of those things for a period of 12 months pre our visit. So we inspect all your business accounting records to check if they're there. If they're there and they exist and they detail everything that they should detail. Ladies and gentlemen, we do not do an audit of your financial statements. That is not us. The purpose of the inspections is not to audit your accounts. You have auditors to do that. They've got to submit those audit reports. So we don't do that. We look to see if you're in compliance with the Act by checking that you have proper trust accounting records, that they're reconciled periodically, etc., etc. So those are the things we look at. We don't go into the detail to check whether they're correct, and we don't audit them to see if they're there. And then we look at the financial statements, because this is where we get our assurance from. If they've been audited by auditors, and whether they've submitted the EAAB report, and whether you've paid over your interest to the Fidelity Fund. So those are the things that we look at from a compliance perspective to see if you've actually done it. From a contracts and mandates perspective, ladies and gentlemen, we want all the contracts and mandates that you've dealt with in the last year. Don't say to us, there's a list of them. Tell us which ones you want and we'll go and fetch them. We want them all. We will pick from there what we want to deal with. We don't look at all of them. Time and cost doesn't permit us to look at all of them. But what we do is we select a sample from them. We select a sample from all the sole mandates, so we want to see all the sole mandates that you've entered into during the year. And we check on authorized signatures. Why do we check on authorized signatures insofar as it gets to contracts and mandates? We want to make sure that all deals that are entered into by agents and not administrative staff or other staff for that matter. We've already spoken about the educational requirements. From a FICA perspective, what do we look at? We look at the appointment of a compliance officer. So like I said, please draft a letter to appoint yourself as the compliance officer of your business. We look to see if you have internal rules and training in place. We don't go and inspect attendance registers and to check whether you've actually done the training. We just look to see whether there's internal rules in place. We look at the duty to identify. So when we select your files and your mandates, etc., we check, do you have copies of the IDs? Do you have proof of addresses, etc., etc.? We look at document storage, because in terms of FICA, your documents have got to be safely and securely stored. So we look to see whether they are properly filed in cabinets in a fairly secure place. And again, when we say a fairly secure place, we're not looking for bank vaults and strong rooms and all of those kind of things. We're looking that it's in a cupboard and the cupboard can close and can lock and the room is lockable, etc., etc. So we look at all of those things. We're not looking at state-of-the-art technology when it comes to all of those things. Where we did have a duty to report, we will check if you have actually reported. And in terms of the Act, we recommend that you have what they call a register to record suspicious transactions. So where you've got suspicious transactions, everybody says to me, what is this register? It's a simple register that says date of transaction, name of party involved, amount, and details of the transaction. And if you don't have any suspicious transactions, you put in there, none. Finished. End of story. We're not going to go further than those things. But when it's there, we want to check that that register is actually there. And we look at all the suspicious transactions. So we will take a look and we will ask the question, did you have more than 25,000 Rand that was paid in cash? Did you have cash transactions? We'll also ask you, did you have any transaction, cash transaction, where a single transaction was split into more than one transaction? So if we had a 100,000 Rand transaction and someone paid cash, we'll ask you, did we have, is it possible that those 5 payments of 20,000 Rand could all have been for the same transaction to avoid the 25,000 Rand threshold. All right, so what are the findings? What do we find when we do these things? I've already spoken about the outdated trading results or trading details. Trust accounts that are not properly designated. Ladies and gentlemen, again, I remind you that any account that collects funds from a third party to which you are not entirely entitled will be designated as a trust account. Now, what's the ramification of that? The ramification of that is, let's say something happens to your agency, and for some or other reason, your agency, and it doesn't have to have anything to do with any of you, one of your interns could do something incorrect that results in a shortfall of your trust funds, and that could result in you being referred to the board, and the board could then put you under curatorship and all of those things. And I mean, we're dealing with another one in curatorship now, where we've actually said, well, we've investigated everything, and everything is in order in this business, and there's nothing further to report, and that's it. So every time someone's in curatorship, it is not because they've done something wrong. Sometimes there's a suspicion that they've done something wrong, and after you investigate it, you realize there's actually nothing wrong in this particular business. So what we look at is, or the reason I'm bringing this up is, when a business or an agency is put under curatorship, the court says that the curator is entitled to seize all trust funds and all accounts which are trust accounts, right? So we take all trust accounts. If any money that doesn't belong to you has gone into your business account, what happens? We seize the business account as well. Ordinarily, we wouldn't seize the business account, but where there's third-party funds gone into your business account, we seize the business account as well. And I think that's important from that particular perspective. And that comes back to the business transactions in the trust accounts that I've spoken about. Trust funds held in business accounts, I've spoken about that one as well. So even for 1 hour, if trust funds comes into a business account and is immediately transferred out, you are still in breach. The fraudulent use of trust funds, I don't even know what more I can say about that. I've spoken about everything else. And the financial statements not being audited about an independent auditor. Now let me tell you about the little story that I have with some of our common findings that comes out of stuff that is not on the slide. You have no idea in the last 4 years how many South African accountants and bookkeepers have all of a sudden decided to immigrate to Australia, right? And every one of them that decided to immigrate to Australia happened to be the accountant or auditor of an estate agent and deemed it necessary to take their books and accounts with them. Right? The reason I'm telling you this is the stories that we get from agents. So when we speak to agents and we say, listen, this is what we want to do, we're coming to do an inspection, and they say, you're welcome to do an inspection, but my accountant has just recently immigrated to Australia. And we say, yes, but you've got all your books of records. And they say, no, he's taken it with him. But why is it happening? Ladies and gentlemen, so if your accountant has gone to Australia, best you get hold of him and get your accounting records back here, because we're going to look for it when that happens. The number of accountants that suddenly died in car accidents in the last few years, particularly those that have been acting for estate agents, has increased exponentially. Right? So these are the stuff. Once we started ramping up inspections, the deaths of accountants started ramping up as well. So these are the things that's happening out there. But we'll get to that. Some further findings. Audit reports submitted don't reflect the correct position of the business. So we have an audit report, and the audit report says everything is fine. And we look at, or we discuss things with the principal, and the principal says to us, but they've got cash flow problems, and the business is not sustainable, and business has been going down, etc., etc. So we look at all of those things. We've found numerous instances where agents have been operating illegally without proper Fidelity Fund certificates. There's been numerous instances of the breach of the code of conduct, where people are not they're not prepared for the educational requirements. And again, a number of people are not aware of what the exemptions in terms of their educational requirements are. So that's something, if you're not completely up to date with it, I suggest you actually look at it. We've come, not across many, but we've come across a few instances where agencies were not aware of the fact that they needed to register with the Financial Intelligence Center. And where they were registered, they were non-compliant with FICA requirements. Typically, those were people that didn't have suspicious transaction registers, people that didn't appoint a compliance officer, et cetera, because in a simple, small agency, the owner of the agency believed that they were the compliance officer by default. You physically need to appoint your compliance officer in terms of FICA. Okay, so what to expect during a compliance inspection? How do we make this happen? The initial communication. Now, ladies and gentlemen, I'll take you back to what I said earlier. We do not have to contact you. We can show up at your door one day and say we're here to do an inspection. But because we're nice people and we're courteous and all of those things, you can expect us to phone you. We'll phone you and say, listen, this is who I am from the board, introduce myself, identify myself, and I schedule an appointment with you. Now, you can make it as easy as you want. When we're scheduling the appointment and you are going on a long holiday to Australia, and when you come back from Australia, your very distant aunt falls sick and you're not available for the next 3 years or something like that, immediately what do? You raise red flags with us. We start saying, well, hold on, this person's never available. This person, for the next 3 years, we can't get an appointment with this person, et cetera, et cetera. So we start looking at those things. Now, we can also tell you we've had instances where we've made appointments with people and we actually got to the premises and they're just not there. They just don't show. And after the third visit, we actually just say, well, to the board, listen, we need to go into a deeper forensic investigation here because this person is not cooperating with us. We can't get through to them. We've had instances where our inspector was standing outside at the door. Knocked on the door, no answer. Knock on the door, no answer. Knock on the door, no answer. Phone. All right? We can hear the phone ringing on the inside. Someone picks up the phone and says, but she's not here. And it's the same lady they scheduled the appointment with. Right? So these are the kind of things that we're faced with. Unfortunately, we need to deal with it, and we deal with it in the best way we know how. We want to make it easy. We want to make it simple. It's up to the agents as to how easy these inspections can be. The durations of the inspections typically take between a day and a half, and again, it depends on the size of the agency, and it depends on their readiness for it. Typically speaking, we send you a questionnaire right up front, and we give you a questionnaire. We send you, when we introduce ourselves and we give you the appointment, or we schedule the appointment, we send you a list of all the information that we want. Put together a file with all of that information in there. The easier that file is for us to work through, the easier it is to have the inspection done. What are the information that we require? So for those of you that want to take a photo of this one, you can be proactive in terms of where we're going. We look for your Fidelity Fund certificate. We look for the copies of the applicable ID documents. So we want to see the ID documents of all agents, all interns, and all principals of that business. Where you're a company or close corporation, we want to see the CPIC or CIPC documents that goes with it. We want all bank statements of all bank accounts for a period of 12 months prior to our visit. We want all trust account bank statements for section 32.1 and 32.2.12 trust accounts for the last 12 months. Ladies and gentlemen, when we ask for those bank statements, we want them even for 32.2 accounts that have been closed. So where you've been holding someone's money and the lease has terminated and they've taken it back or whatever the case is, and you've paid out the money and interest, we still want to see the statements because that's where we check where you've actually fulfilled your mandate in terms of paying interest on the deposit that was held. In terms of the trust accounts and the designation of those trust accounts, we ask for a letter and we request you to get a letter from your bank informing us that the trust accounts are in fact opened in terms of section 32 of the Act. We want your payroll for the last 6 months. Why do we want your payroll? Anyone? We want to check who you're paying commission to. Right? Remember, you shouldn't be paying commission to people that aren't agents. Right? So we want to check who you're paying commission to. So we want to see who's on your payroll. If your receptionist gets commission, we've got a bit of a problem with those things. Can't be a commission linked to a deal. Right? We look at the trust accounting records and the business accounting records, and we, forgive me if I say it, we don't care if your accountant is in Australia. Those are the records we want. You do the necessary, or make the necessary arrangements to get it. We look at your trust creditor register. So at any one point in time during the period that we're looking, we want to see your trust creditor register to see that you've actually done what you need to do in terms of reconciling your trust funds, and that your trust funds exceed what your trust creditors are. We want to look at all your contracts. I've already spoken about that. We want to look at all your expired lease agreements and your interest calculations so we can see that you've repaid tenants the way you're supposed to have. We want your latest financial statements and your estate agents board audit reports, your IT3B certificates, because we want to check your interest that that's correct. Employment contracts and logbooks. Remember, logbooks or interns only graduate once they've gone through certain steps in the process, so that's why we want to check logbooks. Any professional certifications that there are that are relevant, we want to see. Registration with FICA, we look at and we ask for those things. Evidence of appointment of a compliance officer. So ladies and gentlemen, that appointment letter that I spoke about needs to be there. The register of suspicious transactions reports. So when you report it, there's a report that you fill out for it. And the cash threshold reports, that's the 25,000 Rand and the either cash or the transfers internationally. The FICA internal rules, again, keep it as simple as possible. And a completed principal questionnaire. We will provide you with a principal questionnaire which we'd ask the principal of that particular agency to complete. We use that, or we use the evidence gathered during the inspections to corroborate the information that you give us in the principal questionnaire. From an availability perspective, the principal agent must be available. And then depending on the size of the agency, if you have an administrative manager, they need to be there. If there is an internal accountant, it would be good for them to be there. If your accounting work is outsourced, we would typically ask that we have access to them, which we may or may not use. So we may or may not use your outsourced accountant, but should we need to, we'd like to have the ability to contact them. Your FICA compliance officer, if that person is different from your principal agent, would need to be available. And then your HR manager, who's responsible for things like payroll and who's responsible for things like employee contracts, etc., etc. Ladies and gentlemen, that brings me to the end of my presentation.